Ladies and gentlemen, boys and girls, children 18 plus, you are tuned in to the Loan Officer Podcast with me, Dustin Owen, and a very special guest by way of Washington State, now in Philadelphia for the next couple days because he and I are hanging out at the MBA annual conference, MBA 2023. He is the founder, the CEO of Knowledge Coop. He's been making compliance fun for the past 20 years. He is the one, the only Ken Perry. Ken, welcome to TLOP.
It is so good to be here, man. I love what you're doing.
I'm stoked, yes.
Yeah.
I mean, you and I live on polar opposite sides of the country, right?
Uh-huh.
I'm an East Coaster, you're a West Coaster.
Yeah.
But we get to meet up once a year, every single year.
Which should be more.
Which should be, it should be more, but it's at least once a year, every single year at the National MBA Conference, this year being held in Philadelphia. Question for you.
Yeah.
How many years in a row have you been coming to MBA?
Oh man, as far back as I can remember. Counting would be tough, but maybe 11 or 12 years. As soon as I went to the first one, I couldn't stop coming back.
Is it the parties, the free booze? What is it?
That's 100% what it is. No, I have to say this. We were at an Arch MI's event last night, and we walk in and we walk out, and I was with Josh Pitts and Dal, and when we walk out, I go, you guys just stop for a second. Just understand that we just walked into a place super bougie for free. We had some amazing, I had an amazing cocktail. We had some amazing sushi, and then we're going off to another place. We didn't pay anything. We just had an experience because that's the world that we live in, and I never want to take that for granted. Like, I never want to just walk into a party and be like, yeah, that's just kind of us. It's like, no, this is a privilege. Like, it's really cool to be able to spend time here, and it is cool to go to the parties, but dude, the sessions. I mean, Rohit Chopra just talked. I got to watch
Mr. CFPB himself.
Mr. CFPB was here.
Wow.
And, I mean, you're just getting it from them. FHA Commissioner Gordon,
yes.
is her name?
Yeah, Julia Gordon.
Yeah, she was there talking about their changes to ADU. She's like, breaking news right now. It's like an Apple conference in there. With them just like dropping, one more thing, you can count
what's
ADU.
the breaking news? Don't keep us hanging.
It's that ADU rental income can be counted on future rental income on an ADU.
Wow, so utilizing FHA financing.
Yeah.
Oh,
yeah.
So hey, home buyers out there, home buying just became more affordable.
Oh yeah.
Yes, like realtors, you now have something to go out and talk to your communities about.
Yeah.
And loan officers, y'all look into this because now someone who maybe didn't qualify due to DTI issues, help them find, or have the realtor help them find a home that has an ADU.
Yeah.
Use projected rental income on the ADU to offset the mortgage payment.
Yep.
I mean, look, I haven't dug into the guidelines. This is breaking news from Ken Perry, coming directly from the FHA commissioner's mouth herself. Wow.
Well, and that's what you get. You're hanging, like yesterday I hung out with the leaders from USDA, VA, FHA. Like, you're sitting in the room with these people. I go to committee meetings and I go meet with people there. It's just, this is where you stay in touch with what's going on in the business. It blows my mind that more people don't invest in themselves and get out and like open up their world. There are people who've never been to a conference, even a state conference. And it's like, dude, that's where all of the experts are in person, ready to have a beer with you and talk about what's going on. So, I mean, you haven't lived until you've had a beer with somebody from the CFPB. Like, it's pretty fun. But yeah, I mean, that's why you go, is you want to learn.
Let's make that our mission tonight. Let's find Rohit Chopra.
Dude,
let's get him to have a beer with us.
My
or better yet,
gosh.
an old fashioned.
I have followed his career, dude. The old fashioned is what I had last night with coffee in it. It was crazy.
I did not have the coffee old fashioned. I
good.
wish I would have.
He talked me into it at that Arch party.
I was at the Arch party. I saw you there.
I should have tipped you off, dude. I let you down.
Yeah. No, and that's like I started my morning. So similar to you, I came in yesterday morning and I spent my whole day with the Future Leaders program at the MBA, which is a phenomenal program. I highly, highly recommend it. I went through it a year ago. Happened to have won. Shout out to my team. Happened to have won. But then this year I was invited back to be one of the panelists, one of the judges.
Yeah.
So what a really cool experience.
Didn't I see a bunch of young people come up to you last night and say thanks for judging, and you asked the most questions of anybody or something like that?
I was accused of like being, God, you were such an ass. I was like, well, hopefully I was like a good ass and not like a bad ass. Like, you just asked really hard questions. I'm like,
firm but fair.
Yeah, we're supposed to simulate a board meeting.
Wow.
Right? And you are presenting to the board. I'm this board member. And yes, if you want me to sign off on your budget proposal, I'm going to want you to answer some questions. So,
and even though it's simulated, that's got to be intimidating to walk in front of that board. And
for like a professional achievement,
yeah,
the project that culminates, because Future Leaders is April through October 6-month time frame, right? So you're doing multiple meetings, and there's some really fun, cool stuff you get to do. But that group project that culminates the end that you end up having to present to the quote unquote board, that project is probably one of the more taxing, volunteer, self-improvement things I have signed up for in my career.
But that's what I'm saying. Like, you get that stuff when you go engage outside of your company, outside of your office. You get out and you meet people, you get to learn things like this. Like, you engage in the business, and this business is not, I mean, you need to be part of it. We benefit so much from this business, and then people are like, well, I don't want to spend money on anything. It's like, how was your 2020 and 2021? You make some money? Cool. Reinvest that back into yourself instead of just sitting around complaining why things aren't going your way.
Yeah, or better, how are you going to make it to 25 if you're not investing in yourself?
Right.
And then you have on top of it, and this is now why you and I are probably MBA, why you're like, dude, I don't know, I've been here 7, 10, 12 years in a row.
Yeah.
You lost track. It's the friendships you make as well.
Yep.
I mean, there's people right now who are unfortunately being laid off.
Yeah.
But those people who are active in our trade organization are also the most employable because they know they're the most people.
Yep.
So you pick up the phone. I mean, this happened just in our own Future Leaders group. I was in a small group of 5. My class size was probably 30. And shout out to Amy. I mean, Amy is now one of the head counsel at PRMG, right? But Amy, that's not who she worked for a year ago.
Right.
And it was her affiliation with the MBA and going through Future Leaders that helped her get in front of the right people. My friend Alicia worked at a different mortgage company a year ago. My friend Becky worked at a different mortgage company a year ago. Both of them were impacted by their companies either having layoffs or going out of business. Both of them were employed like that in the industry. Maybe not doing exactly what they were doing, but they're with great companies. They're putting food on the table. They're happy in their career. And it came from not just what they learned, but who they learned with.
Dude, I got to tell you a quick story. My wife graduated from DU with her master's, and DU is a really expensive private school.
Yeah, it's Denver University?
University of Denver, yeah. So when she was at graduation, we're broke. I got married at 20. And
wow, I thought I got married young.
Oh,
I was 23.
Oh, were you really?
Yeah.
Yeah, so right after we got married, she went and got her master's, and at the graduation, I'm sitting there broke as all get out. Like, I'm bartending, she's volunteering to get her, master's done. And the lady that spoke goes, I just have to tell you, the most important thing is not where you're educated, what type of degree you have, it's how many people and the quality of people you know. And I know her message because I get it now, but sitting there with a student loan that we were going to be paying on for the next 20 years, I'm like, so we could have avoided all this and just met some people? So it's a little offensive, but like, it's so true. Yeah. I mean, especially when times are tough. Last night I'm with David Kawada, a good friend of mine. He is a connector of humans. Dave Savage was there. We have a group called 7A. It's a 7A mastermind group of just vendors in the industry that hang out and like want each other to be successful. And in times like this, when the market kind of sucks, I need to walk up to Kawada and have him go, how's your family?
Yeah.
And they're like, let's get some perspective on this. And it's those relationships you build at things like this.
Thinking about like what you and I were just chatting about with like industry involvement and advocacy, and then, you got to listen to Julia Gordon, and you got to listen to Rohit Chopra. And today, yes, I got to listen to Bob Brochman speak, who is the CEO and president of the NBA, and Mark, what's Mark's last name? The incoming chairman.
Oh yeah, he was AmeriFirst. Now he's at Union Home.
Yep. He spoke, but then they bring on guests like Tim McGraw.
Tim McGraw talking about music?
Yeah. Tim McGraw and John Meacham. John Meacham, the Pulitzer Prize winning author, and really is a biographer and historian.
Yeah.
And then Tim McGraw sings songs, and it's like,
dude,
where am
so
I?
Amazing.
And then you and I tonight are going to go to Maroon 5.
Yeah.
Yeah. Shout out, by the way, to Freedom, right?
Yeah.
Because that is a Freedom Mortgage sponsored event.
Yeah.
Freedom always throws one of the biggest parties. We've seen
USS
Pitbull on the top of the USS.
Worldwide, yeah.
Yeah, on top of the USS Midway.
Colby Calais was on the Midway like 4 years ago, 5 years ago.
Okay. Yep.
They brought in so many
Old
great
Dominion
artists.
last year in Nashville. This year's Maroon 5.
Yeah.
Then tomorrow night, Tim McGraw's coming back to do an entire concert. Yeah, y'all, if you're not coming to these events, you're missing out on breaking news.
Yeah.
Such as the FHA ADU.
Right.
You're missing out on connecting with friends, but also connecting with strangers who are going to become your friends. And damn good times.
Right.
Speaking of what's currently in the news, I'm kind of a little bit hesitant to bring this up, but it was in Rob Christman, so I kind of want to talk about it.
Okay.
So this morning I'm reading Rob Christman, which, by the way, I saw Rob in the elevator this morning. It's funny, I saw Rob before I read. I wish I would have read it first and then seen him. But supposedly, now this is all hearsay and rumor mill, supposedly somebody leaked U Mortgage's financials on Reddit. Have you seen this yet?
Yeah.
Wow.
Yeah, I got a text with an attachment, and I was like, what? And it was from Reddit. Yeah, it's... I mean,
crazy.
It
Now,
looks
their
real. We don't know if it's real, but
their
I mean,
financials look pretty much in line with what you'd expect from the mortgage industry. That may be getting ready to walk themselves into a slaughterhouse.
Right.
You know, it wasn't pretty. Kind of a bit of a dick move for whoever released them. I'm sure that person may get themselves in a bunch of legal hot water, assuming that it's legit. Now, it could not be legit, but yeah, that's crazy.
Yeah, I mean, dude, I don't think there's one mortgage company in America right now that wants their financials released. I mean, it is not, you could compare it with everybody else, and I don't know the difference you would see or how big it would be, but I can tell you this, I mean, yesterday we're in a session with the chief economist of the NBA, and he's showing us how much money people are not making. And then Marina Walsh does all of the NBA stuff. She's amazing.
So I get to panel future leaders with Marina.
No way.
Oh,
Dude, she's epic.
It is like the highlight of my experience was I'm like, yep, and sitting to my right, you know, it's just me and Marina. It's two other judges. Peter Benjamin. Do you know Peter Benjamin through he's with Akuma, the American Credit Union Mortgage Association.
Yeah.
He's a great dude.
Really?
And then my girl Jen Green was also a panelist. Jen Green runs Tennessee's housing.
Okay.
So she's with the Tennessee Housing Authority.
Yeah.
But yeah, those are the panelists. But yeah, you mentioned Marina.
Marina's
Marina's brain is like,
yeah. I got to go to dinner with her in Bend. I was the MC, and I spoke at the Pacific Northwest Mortgage Lenders Conference, and she was there. And when I found out she was there, I'm like, wait, Marina Walsh is there. Like, I kind of have this, number crush on her.
Yes.
Like, the numbers that are in her head are just unbelievable. Her way of looking at data is fascinating. And so I got to go to dinner with her and a bunch of friends from Asset Mortgage Insurance. And dude, she's freaking as great of a person as she is just a wise and knowledgeable human. Like, just personally and professional, she's amazing.
Yeah, always has a hug ready for you.
Yeah.
Right? And you wouldn't necessarily get that from like a CPA type. Like, you're a CPA, aren't you supposed to be standoffish? You're like, no, I'm just pretty much down to earth. So share with the audience, what was Marina sharing yesterday?
Everybody's broke. So she actually showed one interesting thing. If you look at the numbers on average, everybody's losing money right now, right? It costs to produce a loan more than we make off that loan. And so net income's in the toilet. The top 25% are profitable. And so it is interesting that there is this part of the mortgage industry that's done it right. A lot of that's servicing related, but there's a lot of people that are still doing okay. And so she was kind of talking about that and I'm sure every mortgage banker in the room was like, I want to be in that top 25, like, because we hear how everything's so bad. And so she brought a little bit of levity with that comment.
Yeah.
But yeah.
I mean, from everything that I was talking to her one-on-one about, it's basically, and I was with her before she went and gave that presentation.
Oh, yeah.
So she was like, I go, hey, what are you going to talk about? Because I wasn't able to make it. I still had to do things with future leaders. She was going to bail because she was a main stage presenter.
Yeah.
And she's like, I'm basically going to say, and it's what she told you all, which was, don't really expect profitability in Q1 or Q2. Expect Q1 and Q2 to be not profitable, just like Q1 and Q2 of this year wasn't profitable. Hopefully we can start seeing some headway on the profitability spectrum and scale as we get into Q3 and Q4 of next year, which would also correlate with the country coming into a recession, interest rates coming down, homeownership becoming more affordable, therefore there being more volume. And I did notice the NBA came out of yesterday, and then it was announced to the public today that they do anticipate mortgage volume growing 24 versus 23. So that's a positive.
It is, both
for
volume
those
and units
that can survive the slaughter that we're all facing. By the way, it just got quiet in here. I think we should, for those that are tuning in, if you could hear like a muffled background, it's because when you come to events like this, it is such a banging event that they have a guitar player who is playing in just the main lobby. Like, this is a 3-story event, right? So the first floor where Ken and I are, but shout out to MGIC, we're sitting in these really cool pods.
Oh, yeah.
Right, that they make these pods available, first come, first serve, so people can have their meetings and their interviews and whatnot. But you and I are sitting down on the registration floor.
And it's this loud.
And it's this loud because some dude has his guitar and he's crushing it.
Yeah.
So, my apologies to those that if you feel like you're picking up some background noise, that's what you're picking up. But if you're watching on YouTube and you're like, where in the hell are they sitting? Is that a house?
It kind of is.
I don't know what you can see, but it is a house.
It's a tiny house.
It is a tiny house
Very
with
tiny
a table
house.
for two.
Yep.
And when we were looking for a spot to podcast, I was like, you know what? That would be really cool if we could catch that visual. But
oh, by the way,
yes.
I take incredible notes at these conferences. I upload them all into the Coop, so people can go get those for free in the Knowledge Coop.
So yeah, let's do this. Let's talk about the Coop because you know, I know you and because I know Knowledge Coop. Right. And I know you because I love what you do with Knowledge Coop. Like these were my words when I introed you, but you make compliance fun.
Yeah.
Right? Because compliance isn't necessarily like the funnest topic, but like how would you briefly describe to those tuning in who might not be familiar with your company, what is Knowledge Coop? What does Knowledge Coop do for our industry? What does Knowledge Coop stand for?
Yeah, man, that's interesting. So we've been around 20 years, and we really have two sides. One is the Enterprise Edition, which we only had Enterprise for a long time. We're the intranet of a lot of mortgage companies.
Intranet.
Intranet.
Okay, so like programs,
morning,
products, guidelines,
it's all in there.
Policies
it's all
and procedures.
Yeah.
Okay.
Yeah.
You're providing it and hosting it.
Yeah.
Okay.
Yeah. And then we create a massive amount of content, and then our clients can take that content, bring it into their Coop, assign it to their people, prove that they've watched it. And so a lot of that content is compliance. It's not all compliance, but it's a bunch of it is.
Yeah, because some of your clients, right? These are big IMBs, these are potential banks, maybe some credit unions are thrown in there. Their loan originators might not be required to do CE, but it's because the employer has to be able to attest that they provided certain basic continuing education to their employees.
Right.
And you're raising your hand saying, hey y'all, don't go reinvent the wheel, come to me and I'm gonna put together the proper training videos that's gonna make your regulators happy. And oh, by the way, I'll make sure they're not boring.
Yeah, it's so interesting because you're right. Like that's a good description. Although I think it's the description everybody thinks of, right? We have to do this stuff, and so I guess we want to have fun or like do it in an interesting and entertaining way. And I don't mind that people see us that way, but if you think about it, as stuff changes in this industry, you want your people knowing this stuff. And so some companies look at this and go, how cheaply can I get the garbage that I need for this checkbox? Whereas with us, our clients are like, we want to actually help our people understand it and make them not hate us when they get an email saying they've been assigned a class. And so we're doing like crazy amount of great content so that they feel good, but more importantly, so that they understand it. Because if you're getting your compliance training, you're just like check, and like flying through it, we basically devalued compliance, which as a culture of a company, you're telling your people, we don't really care about compliance.
Yeah, rules don't matter.
So just like knock this stuff out. I'm sorry you have to do it. Instead of saying we do care so much that we've invested in quality education so that you guys understand why we're doing the things we're doing, why it's important to do it right, to create a more ethical industry. Because when we devalue compliance education, we're basically saying ethics don't matter. And we've seen it over and over again. I mean, like you and I have talked about, look at everybody's comp plan right now. I mean, so many illegal comp plans. And if you're assigning our training,
hiring
know
realtors
illegal.
to be loan officers, but are they really loan officers?
So much stuff.
Yeah, it's interesting because, well, first and foremost, I want to thank you. I was today years old when I had it explained as articulate and basic as you did. When you cheapen compliance, you're basically stating rules don't matter.
Right.
I love that. Like that resonates with me because throughout my career, whether I was managing loan officers, managing branch managers, or being an LO myself, do you know how many times I was like, I just gotta crank this stuff out, you know? But no, I actually should know it, so I don't get myself in hot water. I don't get fined, penalized, lose my license, or subject my company to some kind of massive financial penalty because I was a jackwagon who didn't take compliance seriously. But we're talking about compliance. You're talking about you got to listen to the director of the CFPB speak today. This kind of episode is kind of leaning towards, hey, what's going on in the mortgage business? Yeah. Right? It's kind of cool we're doing it from the largest annual conference, like 3,500 mortgage professionals are in this one city for this one event, and it happens once a year. Have you seen or heard about the number of additional CFPB, I'm gonna call them enforcers, are being hired? Yeah. I mean, it's like they're doubling their enforcement size. It's going to be interesting because they're doing it at a time that the industry is contracting. They're doing it at a time that the industry is bleeding like a stuck pig. And they're saying, but there's still rules, and if we find out you haven't been following those rules, we don't care that you're in pain. We don't care that you're suffering. It was on you to make sure that you were following the rules.
Yeah.
And I think they also understand that in general, you can start with the rookie loan originator who's broke, poor, and starving. It's been proven time and time again that originator has a higher propensity to potentially commit mortgage fraud.
Desperation.
Right, desperation. Yeah. Companies also could potentially become more desperate when it's a matter of keeping the lights on or not keeping the lights on.
Yeah.
At which point, then it sounds like our regulators are like, we understand the human dynamic of being in a desperate situation, and we're not going to allow you to go out and do something that could be harmful to the consumer or in direct violation. So, y'all, this is kind of like, can I be like, hey, you kind of been warned. We're bringing it to you, hot off the press. By the way, we should start seeing and hearing about more CFPB actions.
Dude, we need that.
In the coming 12 months.
We need them. And the biggest reason, like I've talked to so many people who just never think they're going to get caught, and they will admittedly break the law, and they're like, yeah, I'm breaking the law because I'd rather break the law and stay in business than abide by it and lose. To which I say, why don't you just be a good guy and then everybody else be good guys, and then we don't have to worry about competing against bad guys instead of just becoming a bad guy. But there was a case a long time ago on Coop. In that case, they took $1 million from the CEO of the company as part of the enforcement.
Okay.
And I got so many calls that week like, hey, how can we get compliant with you? Because we don't want to end up like that because now the CEO is paying.
Yes.
It's those cases that we can use to be like, you guys, like, they're coming. And so you need to pay attention. And I always reference the kid that you knew back in school. And if you didn't know him, you were him. But the kid that like their parents were gone all the time, and so they could throw parties, and it's like, well, we go over there, we don't get in trouble. So I mean, could we throw a party over at our house? Like, no, you don't get away with that. The more stuff that happens, the more people go, well, I'll just go work for that company that's doing it wrong. The more corruption there ends up being in this mortgage industry. So the more that kid gets busted, the more clean the industry can be. And you have these people just running, wild. There was a killer example in, I spoke on a day that Rob Christmas was speaking, and Rob's a buddy of mine. And so after he finishes speaking, he walks over, and I'm like, what you were just talking about, he's talking about how we choose lenders. And he said, some people choose lenders by saying, they're not the best rate, but they provide me with all my marketing expenses paid for free and all these other things. And I go, dude, it's the biggest RESPA violation. It's one of the most common RESPA violations right now is people, using a lender because they get things for them, not because of the borrower. So the borrower pays a higher price because we're choosing based on our things that we're getting, right? There was a freedom mortgage case that just happened.
Yes.
And that RESPA case, everybody in the mortgage industry should read it because it deals with open house flyers. And I had a buddy call me. He's like, dude, we do that with my software. And I'm like, you should not do that. And he's like, we're going to change it. So it's causing software companies to go back and hopefully reevaluate the way they allow loan officers to commit RESPA violations. But until loan officers stop using these organizations that break the law, they'll still break the law because it's a loan officer's risk.
Yeah, and quite honestly, the real estate community demands it. In many instances,
right.
the real estate
and
we give in. It's almost like I think about the steroid era in baseball.
Yeah,
right. It just got to a point to where it's like if you weren't using steroids, you maybe weren't making the 26-man roster.
Right.
Right. Or if you weren't using steroids, you weren't going to become an all-star. And if you don't become an all-star, you can't get that contract extension.
I love that correlation.
And everyone just started using steroids until finally MLB said, hey, steroids are bad.
Right.
And we're not going to allow it. And they punished some. And then now going forward, they have their written rules and they have their screens and their tests and inevitably every year someone's getting popped for
you don't think
PEDs.
They got them all?
No.
There's like 7 guys got busted for it. All the other guys are like, stop the steroids now.
Yes, yeah, but it is very interesting. In a perfect world, speaking about the relationship of realtors and lenders like the MSAs, because if someone were to ask me, hey Dustin, if you get to have that old fashioned with Rohit tonight, right? And you ask him, and he's going to be honest with you because no one's around and I'm not allowed to repeat it. He would tell me, we're looking at Comp, we're looking at realtor, lender, MSAs.
Yep, 100%.
And we're also really concerned about the number of realtors who are also doing this dual, yes, FHA recently allowed it, but we didn't really have a say in it. We didn't really know what was going to happen. And now it seems like lenders are just going out and instead of paying realtors for their Zillow leads, which was a quasi-shady workaround to just straight up paying for referrals.
Totally.
No, we're just going to hire them as loan officers, part-time loan officers, and we'll just do a commission split every time that they refer in a loan.
Right.
Yeah, I would see those are the three big things. But what I would love to see have happen, and I think that's the only way this will ever work, it's all not allowed. Like, none of it.
Right.
Make it to where I can't even buy you lunch. That's asinine, because I should. If you're a realtor and I'm a lender, I should be able to buy you lunch.
Yeah.
Right? I should be able to host a lunch learn at my office and have barbecue catered in.
When you can still do that.
Correct.
Yeah.
But I'm just saying, the problem is you do that, and then all of a sudden, lunch becomes
Who got invited?
Tickets to the Phoenix Suns or the Orlando Magic, and then it's, what type of event? Oh, it's open bar event, and it's sushi, and it's like, oh, wait a minute, now it's all of a sudden a $200 per person event, and it just starts to steamroll after that.
I gotta tell you this. So I was at this event. It was in, it may have been in Philly. It was the NAM event. The National Association of Mortgage Brokers used to throw these killer conferences, right? And I'm sure they do still. In fact, I might be speaking at one soon. But I was at this event, and I walk into this restaurant where they're hosting Troy Aikman, and he's signing footballs. And I'm a recovering Dallas Cowboy fan. I grew up Dallas Cowboy fans. They had so
Your
many
season
felonies
started
I had
off
to quit.
great. Your season this year started off great.
I've been a Bucs fan since 6th grade, but I started as a Cowboy fan. And so I go to get Troy Aikman's autograph, and I go to walk in, and the guy at the door goes, "Oh, you're not on the list." I said, and it was a lender. And I go, "How do I get on the list?" And he goes, "You got to be a broker that sends us business." And I'm like, "That's a RESPA violation." And he goes, "What?" And I'm like, "You can't lock out people that don't refer you business, or that's a thing of value. Getting into the party is a thing of value. And it's specifically in exchange for the referral of business if you lock me out of this thing." And he looks at me and goes, "Go." And so I got in. So I got
Does that really work on the wholesale side? So a wholesaler to a broker, RESPA also applies.
100%.
I did not know that.
Yes.
I was, again, today years old when I learned that.
Dude, yeah.
Yeah, I've always memorized and understood and followed RESPA Section 8 as it pertained to really, I guess, and maybe I've never really been a broker.
Right.
Like, so I've brokered loans.
Right.
But I haven't operated like wholeheartedly where everything I did was through the wholesale TPO channel.
Yeah.
So I've always thought, no, I can't. Ken's a realtor. I can't invite only Ken to my party if Ken refers me loans.
Yeah.
I can't obviously give Ken a $5 bill every time he refers someone to me,
right,
et cetera. And I also knew that at one point I used to have an insurance agency that used to love to give us $5 gift cards every time that we referred them.
Yeah.
And their whole marketing was refer and refill.
Oh my
Refer
gosh.
and refill. And then finally our compliance officer was like, "What is going on?
Yeah.
You all need to give all of those, $5 gift cards back. They can't be doing that." But I never thought that it worked, the wholesale account executive only doing something for that particular broker if they referred them.
Well,
I've never heard it that way.
You're referring settlement services, right? So if you refer settlement services, the company you're referring that to can't pay, and you can't receive a thing of value for that settlement service referral. So it's a referral just like a realtor referring you settlement services, right? So a mortgage, title, insurance, everybody's surrounding this, the settlement service provider, therefore they're covered. So a wholesale lender is covered in their relationship with the broker.
So let's say I'm in Ohio.
Right.
And I'm a large national wholesale lender.
Okay.
Can I fly you into Ohio for training?
That's a good question. So there's I'm not an attorney. I should preface it with that.
You played one on TV once, though.
I play it a lot, yeah. But if you were to read RESPA, in the definition of things of value, one of the words in the definition is trips. And so trips are literally a word in the definition of things of value that can't be given in exchange for the referral of business. So it's dangerous to do something like that because you're getting free anything. Now, what you can do is educate. So if you get there and they're doing an education class, that's awesome. Just like you could do a lunch and learn for a bunch of realtors, because education is exempt under RESPA as long as it's not CE education. So if they're offsetting your CE education, now they're offsetting an expense you would normally incur to renew your license, and so now we've crossed a line.
Okay. Interesting. Yeah, because I have a lot of friends that they love it. They get flown up to states like Ohio, and they get this training, and
they probably send a lot of business that direction too because of the thing of value they received.
Yeah, and I guess that's probably the great line is one would argue, look, this is not quid pro quo because I'm doing this for everybody,
right?
Regardless if they send me business or not.
Yeah.
But you're like, yeah, but there's still airfare and hotel rooms. That's a big dollar amount.
Those aren't education.
You're not doing that solely out of the kindness of your heart.
Right.
Because that education, especially in today's world of e-learning,
I
mean, it could have been done via Zoom.
Right.
It could have been done really well.
Well, and I would
be
argue
a-
if it's valuable, people would pay for it anyway. Like if you made it available and said, you get yourself here and we're going to educate you, I think people would do it. Like if they're providing amazing education and you get a tour of the facility and all that, then awesome.
Yeah.
I'll cover my own expenses,
Yes.
right? I mean, anything that you put money to, you're actually going to spend a lot more time focusing on it. You know, we've talked about coaching. I don't do any coaching. But when somebody puts money on something like coaching, they will get so much more out of that coaching experience because they need to make it, like, in their heads, justifiable expense.
Well, and you and I can almost put a bow on today's episode, coming full circle, and you start thinking about what you and I were talking about off air, right, away from the cameras, which is when you are a real estate agent, when you are an entrepreneur, when you are a mortgage loan originator, you work for yourself. You own your own business, whether you're 1099, whether you're W-2'd, if you're 100% commission, you are your personal brand,
right?
And you're out there selling yourself first. What are you doing to invest in yourself?
Right.
Like, how many businesses do you think you could ever go start for less than $5,000, but you can become an LO, right? Let's say I want to become an LO, and I want to go to Knowledge Coop because they're pretty badass with their training, so I want to take the 20-hour course. What's that going to cost me?
3 something.
Cool.
Yeah.
$400.
Yep.
So $400. I take the 20-hour course. Now I need to go pass the exam.
Which means you're going to need Rocky.
Which means I'm going to need Rocky over at MLO Study Buddy. And let's say that's another, I don't know what Rocky charges, $400. I bet it's cheaper than that.
Yeah.
Let's just say you spent your $800. You took the course, you studied, you passed.
Right.
Woohoo. Now you need to get hired on, and people stop there.
Yeah.
They stop. $800? No. You need to allocate at least probably $500 a month to your marketing. Your marketing may very well be taking people to lunch, taking people to coffee, hosting a lunch and learn, right? Like you may very well need to do that.
Yep.
But then what else are you doing? Because how are you going to learn this business? I mean, you're going to need CE. That's going to cost you money, right? You're going to need some kind of coaching, some kind of training. And that's where, like, we decided we need to go all in on the podcast, and we launched TLOPonline.com. We partnered with Knowledge Coupe because we're telling the mortgage industry, if you're not investing in yourself, you might as well, my opinion, you might as well probably look for a new career, because I don't know any other business that lets you operate and not invest in yourself.
For long term, you have to. If you want to be here short term, that's cool. You'll drop out at some point, but for long term, you do need to invest.
And obviously, I'm not talking to those that maybe work for a bank or a credit union where you're supporting branches, or you work in the consumer direct, or you work for a servicer, and it's about retention.
They still need to do that work.
Well, correct. You still need to somehow invest in your salesmanship. And
product knowledge. And,
yes. There's still a lot. But for most of us who get into this, we get into this because we want to be our own boss. We want to have an opportunity to make a lot of money while also supporting the communities that we live in. But we do so, and we have no support system. So I'm like, no, y'all should definitely check out something that's going to coach you, train you. Don't try to reinvent the wheel. Go to the people who know how the wheel works and have them teach you how to develop it, shape it, roll it, and keep it in working condition. And then something that we didn't mention, but I want people to know. So you talked about, obviously, a new originator can start with you. But you talked about enterprise. You have companies that use your services. But you have a solution for individual users too.
So glad you came back around to that. And you actually get a membership by being a membership of your platform.
So sign up for an entire year of a TLOP online membership. So you'll get our 3 live coaching calls a month, our 300 plus training videos, our resources, our links, all of that. And you get a complimentary membership to Coupe Plus,
which is all your CE covered.
All your CE is covered, but Coupe Plus has the trainings that honestly I don't do.
Well, and we've done 50 hours of content in the last year, and we just released the app. So you're the first person I'm saying this out loud with. The app just dropped 2 days ago. So now you can jump in there, get all the things that I'm live blogging from here. We'll have links to more of your stuff in there. But inside the app, I mean, we have a free version of the app where you get the basic stuff, and then we've got additional content, which comes with Coupe Plus that you guys do.
And just so the audience can hear it from you, what are some of the types of trainings they're going to get through their Coupe Plus membership?
Yeah. We do it based on what the industry needs.
Okay.
So right now we've got a lot of leadership training that we're building, recruiting training, sales training, how to call on realtors. We've interviewed some realtors recently on you just started, where do you go, what do you do, how do they want to hear about us, stuff like that. And then all the compliance training, how do you take pull a credit report, what's on the credit report, reading appraisals, all the nuts and bolts of what everybody needs. Which is funny because tax returns are people are like, I've been doing this for years. Yeah, you can't read a tax return. You still suck at that because your processor did it. Now your processor's gone. So what are you going to do? You got to go back and you got to get educated on all of those things.
Yeah.
And so we're walking you through all types of income, how Fannie and Freddie qualify income, everything in there. Along with we're now in process, and I haven't said this out loud either, but we're in process of implementing AI in there. So you can search guidelines. We're starting with VA. So you can just ask our AI questions about VA guidelines and it will answer it. And that's not released yet, but
that's awesome.
We're working on it.
Yeah. So mortgage loan originators, if you feel like you're lost, you're on an island, you don't know where to turn, you don't know what you're doing, you need coaching, you need training, you need systems, processes, tools, you need to be a part of a community that also wants the same thing that you want. Ken and I are today saying, hey, partner with us. Let us be the cool uncles.
Yep.
We will be, y'all, you need a really good manager. You start there. You need a good sales leader. You need a good branch leader. You need to work for a really good region who they understand sales culture, systems and processes, marketing and best practices. But that gets you so far. A small investment into your future success would allow you to have everything that your branch manager is or isn't giving you, and then so much more. And that's where this partnership would really make sense for a lot. Not all, by the way, not all. Some of y'all, not for you, but many of you should probably look our way.
Dude, I got to say one more thing about that. I hate it when I hear somebody go, oh man, my company doesn't pay for that. It's like, okay, well you can't, that doesn't mean it's impossible. Like having owned a company for 20 years, I can tell you my company is my own expense. Like this is me paying for it, right?
Yes.
And so once you're a business owner, you start looking back at your W-2 days going, I wish I would have invested more that I didn't expect my company to pay for. And when I go to a conference and somebody's like, yeah, they didn't send me this year. It's like, you could have sent yourself. Like, do you find value in it? But that default of like, I'm going to wait for my company to make me successful, you said it best. Like, you're an island here, right? Hopefully you've got a great company that's supporting you, but your own knowledge level is up to you. Like your relationships are up to you.
Correct. So think about this. You have a great company who supports you and you go above and beyond.
Yeah.
Or you have a company who doesn't support you, so you have to go above and beyond.
Right.
But the answer is never to do nothing.
Right.
Like you should consistently be putting one foot in front of the other, asking yourself, well, what can I do today that makes me a little bit better than yesterday?
Yep.
And yes, control your own destiny. That's kind of what I just heard you say. Yeah, control your own destiny.
And go get people who know more than you do. And that's why I love what you guys are doing, because people need to find people that know more than they do, that have a little bit better direction, that can direct you the right way. Because what's the old phrase? You're known by the company you keep.
Yes.
In this industry, I hang out with people smarter than me. Like that's the only way it's going to work.
You absolutely have to. I was sharing that with you. I mean, we've grown so much. We basically launched the TLOP company in May of this year.
Yeah.
So we're 100 days into this.
Yeah.
Right? Nikki and Mark and John are with you and I. We're in Philly together. And this is like, we have grown so much in 100 days. I can only imagine like how much further we're going to go, but we don't do it alone, right? I mean, I reach out to guys like you, guys like Savage, guys like Amir. Like I reach out to my counsel, people I look up to who some of them way more successful than maybe I'll ever be, and I'm just going to chase them my whole career. Other people more experienced, or they come from it at a different angle. But yeah, don't go at it alone.
Right.
Like that's probably one of the more asinine things that most people do. And I'm even talking, gosh, I could go on a total tangent. Some of our guy friends outside of work, don't go at it alone. Like, I'm here for you. But we as dudes always have a hard time of raising our hand and saying, I'm vulnerable, I could use your help. I'm feeling a little bit lost. And then, oh yeah, I too have had that same personal issue. I too have had to overcome that. Let me walk you through it. And we don't do it enough in our personal lives, let alone in our professional. I would encourage everyone, start in your professional life of raising your hand. It's a lot easier. And then let that bleed into your personal life.
100%.
Awesome. Y'all, he is Ken Perry. His company is the Knowledge Coop. My name is Dustin, last name Owen. You've just tuned in to the Loan Officer Podcast. That is all the time we have for you today, but we do look forward to catching you on the next episode. Peace.
Thanks for having me.